Yeah, India has been a key beneficiary of global flows into emerging markets this year, not only equities but also in fixed income. I guess a combination of local factors as well as global factors. Globally, the fact that US bond yields have stayed below 3%, the commentary remains fairly dovish from ECB, possibility of another easing by Bank of Japan, even though the Fed is going ahead with its tapering, but they're going to be very slow in kind of achieving their ultimate goal. So that's helped India, no doubt. Weakness in global developed markets caused to an extent by weather patterns, but that means that the expected bounce in growth in some of the export-linked economies in Asia has not come through. Economies like Taiwan, Korea, maybe Singapore, Hong Kong, and that has brought India into focus in a positive manner. In addition, local factors in India have also supported the move. You've seen inflation come off, you've seen monetary policy having been tightened, and now probably at a stage where expectations of further rate hikes are pretty low. You've seen the corporate sector respond well, as in profit growth seems to be coming back. We've had 2 quarters where profits have tended to surprise slightly on the positive side. So a combination of both local as well as global factors has caused India to stand out. Whether we get more flows over the course of the next month and a half or so, I think we might see a slowing down of flows through this period of elections, and then after the elections it will be a factor of how well the policies come out and whether the electoral results meet expectations or not, and the kind of economic program that the new government embarks on, and that's going to be a key differentiator for flows to continue or to halt on a medium term basis. Well, the most important factor from a longer term perspective is the policy response in the emerging market world to the developments over the past 12 to 24 months. And you've seen positive policy response in economies like India, Indonesia, Brazil to an extent that they have hiked interest rates to a more sustainable level, Turkey. So some of these economies responded well. So that is domestic factors taking cognizance of the problems that these economies are facing. The other important thing for emerging markets is how fast does the US monetary policy get tighter. At this stage, our expectation is that monetary policy will remain fairly loose even as we move closer to the eventual Fed fund liftoff date, which is going to be sometime in 2015, second quarter of 2015. But of course, ECB we think will remain fairly loose. We think Bank of Japan could announce looser monetary policy. More importantly, we think a lot of emerging market banks, India, Indonesia, Brazil, they're very close to the end of their own hiking cycles. So the backdrop for emerging markets is not as bad at this point in time. What needs is a proper flow through in terms of earnings for the companies, which is where most of the struggle is. You leave out India and maybe a couple of other emerging markets, the earnings revisions scores for bottom up from a bottom up perspective for most of the emerging markets still remains weak. When that turns around, you probably see a more sustained emerging market rally as compared to developed markets.